What's up, guys? Welcome to another weekly Forex forecast. Non-farm payroll is what we are waiting for this week, this Friday. And why it's so important, why it's so interesting? Because this week we saw how strong the GDP was in the US, which surprised many, as the number came to be much bigger than in any forecasted consensus. And that's why the market is now anticipating to non-farm payroll to see what will the job market do in terms of the numbers, of course, what data will we get, and how will that affect the Federal Reserve chances to actually go and be able to cut the rates more in 2025, maybe the beginning of 2026. So what do we have in the charts? Let's start with the gold, which continues to make the highs. However, we already see some slow down signs on the indicators. While the market still tries to push, every high we have countered at the moment with some bearish presence. That's an important sign. We will talk about what all that could mean. Quick reminder, we discussed about it in the last week, but we have the long bearish divergence on the moving average of the MACD from the daily chart. Also, if we go to the weekly chart, we see a potential divergence building up there. Say potential because we don't have the second peak yet, but the pressure starts to build up. So if we go to the 4-hour chart, there are two scenarios I love to follow when it comes to the waves as it develops at the moment. So we complete right now the structure of the 5 waves with a bearish divergence that developed as well on the 4-hour chart. The previous high here on the last week, we did counter immediately. So it was a false breakout, a high which immediately pushed to the downside. However, in none of the cases, we actually saw the gold making lower highs, lower lows. So the trend did not change. All the other setups, the other indications we have are nothing more than indications at the moment. So there are two main scenarios I love to follow in that kind of price formation. The first one is to get another horizontal false breakout. Why horizontal? Because let's go to the previous week once again. We did have the false break right above the peak here of September, so on the beginning of September. So another false breakout here on the peak could be a great indication. And when reversals do build up, sometimes we see that happening after more than 2 false breakouts. So 2 or more false breakouts. And that's why another false breakout should be a very good sign. But a false breakout also could be not horizontal, but on trend lines when we connect the ongoing peaks. So for that, there are two scenarios. One, of course, is the line we saw. Second is this line under the same logic of the divergence. And if we spike above this high, watch for the reversals from there. Is the reversal that's the reversal. Am I doing this part? Does the reversal have to come only after false breakout? The answer is not necessarily. Sometimes it happens to be in terms of waves. And in that case, the formation that could follow instead of false breakout is if we see the gold pushing down to make lower highs, lower lows, breaking some trend line, ideally also breaking the previous lows. That could be an indication that the waves to follow would give the sell opportunity afterwards. Next one is the S&P 500. After a major corrective movement, we saw it, the S&P following after the GDP, the recovery that happened today, which is also very interesting. So let's break down what do we have on the S&P. We are still moving inside the bullish channel. Similar to gold, it simply means that as long as the reversal did not complete in terms of price structure change, which means lower highs, lower lows, the bullish trend is still on. But there are a couple of things we need to pay attention to the ongoing building divergence, of course, which shows the slowdown that continue and developing, but also take a look on that scenario. We saw for the first time the trend line that it actually was broken to the downside, and we actually start to see the lows breaking here and here, if we ignore the spike, of course, which is a very interesting indication. Another very interesting indication here is, let's zoom in a little bit, take a look what happens here on the daily chart. We have a beautiful 3 bearish soldiers. This is a pretty strong reversal signs usually, or at least a sign that seller starts to show some interest. Last time it happened was here, which continued to push down and created another push right on the next wave. So I would not be surprised if the way it builds right now, we have an indication that something interesting is happening. So what would I like to follow? If we go to the lower time frames, we currently see some lower highs, lower lows, either in 3 waves or 2 waves, doesn't matter how you break it down. So if we get some ABCD or a range here, as long as these recent peaks and the resistances around 6660 and 6680 hold, that could be a classical bearish pressure and push another wave to the downside. There also could be, of course, the alternative case scenario similar to what we saw on gold, and that's the fake high, right? Something like that. And that could line up perfectly with the ongoing and developing, let's just draw that, the channel on the daily chart, go and retest the peak actually before the reversals. I definitely will pay attention to this triple bearish candles here, 3 bearish soldiers. It's a strong sign that a reversal is building up, and I will be watching for the reversal in one of these waves. But keep in mind, as long as the price structure does not change, the trend is here. Okay, wait for the price to change before you rush to say trend is over. Euro dollar make a very interesting thing here, breaking below the 4-hour chart channel and below this key low we see around the 116 50-ish, 60-ish, sorry. And the interesting part here is that the euro is making now sequence of lower highs, lower lows. This is a great technical sign. So for me, as long as the recent peak holds, I believe the euro is still sell the rallies. Couple of key levels to pay attention to: the broken, let me just draw it here, the broken support that becomes a resistance, last high of the uptrend act as a supply, last high here of this downtrend acts as supply, and as long as these level hold, I believe the euro has more to offer to the downside. Keep in mind also the broken support, the broken dynamic support or the trend line. This could be a dynamic resistance for the euro retests. And the final one is Bitcoin. Last week we were talking about, actually last several weeks, and if you don't know what I'm talking about, you can find all the videos, all the weekly forecasts on this very channel. So make sure you subscribe with the subscribe button below this video. We discussed about the Bitcoin that we expect to see another wave to the downside. Why is that so? Bitcoin completed 3 bullish waves that countered with bearish divergence on the moving average of the MACD, and usually it is a sign that a correction is due. Correction could happen as an ABCD. Correction sometimes could happen as a range. This other way around, it means sell the rallies. So is this move down over? I personally don't think so. If we drop to the 4-hour chart, we can clearly see that at the end of this correction that we've had on the 4-hour chart, we also had the classical reversal sign of bearish divergence and then lower lows on the chart with lower lows on the indicator to indicate a convergence. So right now we are building up these beautiful waves. Currently there are no completed signs here, so from my point of view, as long as the broken support that now acts as resistance here and here, as long as this level hold, I believe Bitcoin is still under bearish pressure, and I would not be surprised if we actually see the Bitcoin going to retest the level of 106, 105,000, and then probably closer to the 100,000. So that's it for this video. As always, I hope you enjoy the trading opportunities. Please hit the like button if you do, and please subscribe to our channel with the subscribe button here if you enjoy the content. I wish you a wonderful trading ahead, and don't forget, Nonfarm Payrolls this Friday, and don't forget, wait for the official signs on the price before you take action. Indicators indicate, the price dictates. Don't forget that.